I recommend you watch this video in full before we get to tomorrow because it has some big impacts on the cost of living, real estate, the jobs market, all things that impact every single individual Canadian. And ahead of tomorrow's big inflation report, we actually got a different report today that shows that the Canadian economy may be heading in a rockier direction than we previously thought, which is actually a good thing in the sort of backwards land of central banks, but we'll get to that in just a second. So let's dive right in and make sure to subscribe if you haven't already done so, and if you want sources for the videos that I make, you can check that out in the first link in the description. This report that came out just today is called the Business Outlook Survey for the fourth quarter of 2022. It's put together by the Bank of Canada, and it tells us a bunch of things, like do we think that businesses are going to expand or they're going to sort of rein things in? And that has a big impact on individual Canadians because that means changes in the average rate of job hourly pay rates and how those are going to increase in the future, as well as Canadian unemployment rates. Now, a big takeaway from this report, and we're going to go into some more details on it, is that the Bank of Canada seems to be losing credibility in the eyes of many business leaders. They no longer think that the Bank of Canada is going to be able to effectively do its job, which is to bring inflation down to between 1% and 3%. That's the main objective of the Bank of Canada. And some are saying that maybe the Bank of Canada lost a little bit of credibility when over the past years, before we sort of acknowledged that inflation was going to be such an issue, that the Bank of Canada was saying, oh, this is just transitory, this inflation is going to be here, then it's going to be gone, but then it ended up sort of sticking around for the long term, so now people trust the Bank of Canada less as a result. Now, when the Bank of Canada loses credibility, this has a bigger impact than you might think, because one of the things that controls inflation is what inflation expectations are. Where do people think that inflation is going to go in the future? And if they think that inflation is going to be higher in the future, then they're going to spend now, which adds more demand into the economy. So it's important that the Bank of Canada has people believe them when they say that inflation is going to come down. Otherwise, the inflation problem could get even worse. And now, these were some numbers that the Bank of Canada included in October's monetary policy report, where they sort of project where they see things going, including inflation. And this is what they said. They said that they project that inflation is expected to return to the top of the 1% to 3% control range, so expecting inflation to go down to 3% by the end of this year, 2023, and back to the 2% target, which is the ideal place where they want it to be, by the end of 2024. But even though the Bank of Canada said this inside of their monetary policy report, well, people just don't seem to believe them. That's exactly what the new data released today says. You can see here how people's expectations for when inflation will get back down to the 2% target have changed over time. You can see all the different options here that people can choose as to when they believe that inflation is going to actually come back down to 2%. And you can see each individual color bar is a different time that they asked this question. The blue ones from the beginning of last year, then Q2 of last year, Q3 of last year, and now the new data of Q4 from last year. And you can see here that there's been a huge credibility shift, a huge belief shift in people's expectations of whether or not the Bank of Canada is going to be right with what they've lined out in that previous monetary policy report that we were looking at. Here you can see in Q1, Q2, and Q3 of last year, people largely believed that 2024, this sort of block of these results, was the time that the Bank of Canada would have inflation back down to around 2%. But this most recent data says there's been a big shift in what people expect. Instead of thinking that by the end of 2024 or by the start of 2024, they'd have this under control, people are saying it's going to take until 2026 and beyond to meaningfully see inflation come down. And some are saying, including Scotiabank's head economist, that, well, maybe this is because of a sort of boy who cried wolf situation where the Bank of Canada has consistently said, we're going to bring inflation down, but we just haven't seen those results. Here's a clip from a recent talk he gave.
It's partly why the governor spends all this time talking about 2% inflation. We're going to get everything back down, because he wants people to believe that's going to happen, because if they believe it's going to happen, then you don't have some of this indexation going on that actually makes his life, their life, much more difficult than otherwise would be. So it's real, and it has an impact, for sure.
Yeah. Do you believe Tiff when he says that?
No. And I don't think, that's not our forecast. He has no, I'm assuming that he believes it when he says it, but he's got no choice, right? When you're trying to convince people that, his job, 2% inflation, that's the law, he's got to convince people that that's going to happen, because if he doesn't convince people that's going to happen, his job becomes so much more difficult. So there's an element of, and he would never, ever, ever, I'm sure, agree with anybody suggesting that he's misleading folks. But I think a little bit of misdirection is helpful in this context. You've got to, whatever you can do that makes people believe you're going to do your job or achieve your objective, is helpful in the current circumstance. The risk is that you say it for so long that people start displaying it's the Peter and the wolf. Peter, the boy who cried wolf. Sorry, that's the French version of it. That you keep saying it and it doesn't happen, and ultimately undermines your credibility. And in fact, that's I think one of the challenges that we've been dealing with here. That he's been saying this for a while, and there has been a loss of credibility. It's undeniable, and rates are probably needing to go higher. They're probably higher now than they would have been otherwise, had he, I think, maybe been a little more humble and been a little bit more forthright in terms of his understanding of inflation and what that means for Canadians and policymakers.
So at the same time that we're seeing this loss in credibility at the Bank of Canada, several key indicators are actually headed in a negative direction, which is ironically a good thing for the Bank of Canada. Remember, the Bank of Canada's key goal right now is to crush inflation, and if that means that they have to put everything else in the crapper and have all of these sort of negative indices showing up and continuing their interest rate hike cycle, well, then they don't really care as long as inflation comes down. That's what they're concerned about. You see, there's been a large increase in the amount of businesses that are worried about consumers actually buying their goods or services. They're worried about demand or sales. Now, there are other key issues that businesses are more worried about, which is cost pressures, the prices of the things that they use to do their business going up, labor shortages, and just general uncertainty about the economy. We did see a dramatic increase in the amount of people responding that they were worried about demand or sales, and we can see that right here. While in quarter 2 of 2022, we saw that there was only 18.28 people responding that they were worried about demand or sales. Now that has jumped in one quarter up to 31.88% of businesses saying, hey, we're worried that people just aren't going to buy our stuff. This isn't good for businesses, but it is good for the Bank of Canada, right? If businesses are worried that people aren't going to buy their goods, what's something that happens? Well, think about it. You're going to start seeing price cuts, or at the very least, the increase in the price of things slowing down, right? Because if you don't have enough demand or sales, well, you can't sustain those higher increases of prices. Now, over the past year, we've also been experiencing record high employment rates or record low unemployment rates. Actually, the lowest unemployment that we've seen in the past 50 years has been over this past year period of time. And that is something that the central banks are worried is inflationary, because if you have less people to fill the jobs, then those jobs have to offer higher dollar value things. And in order to offer their employees those higher dollar wages, then they have to increase the price on their goods, which is inflationary. But new data suggests that we might have hit the peak in terms of this labor shortage issue that businesses are dealing with, which also means we might have hit the peak in terms of wage increases as well. Take a look at this. When businesses were asked what their largest challenge was if they were to need to sort of fulfill a higher demand, typically in the past they said that 62% of those businesses replied that labor bottlenecks were one of their largest issues. And we've actually seen, as of this quarter 4 data, that has decreased from 62% down to 51.5%. So businesses are saying, okay, labor shortages, we're not dealing with that as extremely as we were just a couple quarters ago. And I mentioned this in a video about 2 months ago, that now might be the best time to sort of negotiate a raise, or like 2 months ago might have been the best time to negotiate a raise before we start to see more slack in the labor market, right? Because if there's more people willing to fill a job, then you have a little bit less leverage to negotiate your wage, and unemployment is expected to rise over the next little while. Now, this is actually good in the eyes of the Bank of Canada. Remember, their lens is whatever makes inflation go down is a good thing, and inflation sticking around is a greater risk than the potential deep recession we could see if they raise interest rates too high. Now, some people believe that these labor shortages, even though there's a little downturn now, will last for the long term, because these labor shortages are tied to structural Canadian elements, right? Largely demographics. We have a generation of baby boomers who are retiring, leaving the labor force, and for the first time, we have more people leaving the labor force than people coming into it. But at the same time, other people will point to Canada's high immigration as the silver bullet for labor shortages. Of course, remembering that the Liberal government's target right now is to bring in 500,000 new immigrants every year for the next 3 years. Listen to this clip that I think provides a little bit more insight.
For the first time in history, retirements are outpacing growth in the working age population. Does this cushion the job market in the case of a recession? And does it also mean labor shortages are here to stay? Amanda, what do you think?
I mean, the demographic story, of course, is this sleeper hit that we've known about for decades. It was always coming. And it's been interesting to watch it play out through pandemic because it got our attention because during the actual lockdown period of the pandemic, retirements were delayed. So we got this big kind of camel hump bubble of retirements right after that really shocked us. It was always happening, it continues to happen, and it's a big risk to the economy. Does 500,000 immigrants a year of the right age group offset that? I think that's the hope, that's the aim. But it is and by the way, not just them leaving the labor force, but the shift in how they consume is also the other big, slow-moving story for our economy that is hugely relevant in the years ahead that probably people who are investing have to think more about than most of us. But those slow-moving factors are definitely alive and well, and those will have huge impacts on central bank policy, fiscal policy, for the next decades. And it's a bit of an experiment. The immigration piece of it's still a bit of an experiment because it takes time to integrate a new Canadian and get them into the labor force, and that there's costs associated with that integration. So how that washes out, it's a bit of I don't know how long, maybe Jeff has a better answer, but it's a multi-year experiment.
She makes some interesting points there about how bringing in new Canadians actually helps with this labor force issue and could bring down our employment rate slightly so that we don't see as much inflation in the future. This is what the Bank of Canada is looking for. But also bringing in new Canadians makes Canada more productive in terms of gross domestic product, GDP, which is what a lot of politicians are looking at to see how much Canada is growing in terms of its economy. But at the same time, she points out that these new Canadians would also act as consumers, which also props up spending within the economy. But I agree that immigration still feels like an economic experiment that we don't have all the answers to yet. We don't know exactly what the extent of the disinflationary impact of filling more jobs is, leading to that lower wage growth that we were talking about. But how does that impact the potentially inflationary impact of more demand from more Canadians spending in the economy, which is an inflationary force? So we don't really know how this nets out in the end. But it does bring to my mind the idea of human QE, this idea that, okay, central banks, they can't lower interest rates anymore to prevent a recession. They can't print money or do QE, quantitative easing, to sort of stimulate the economy anymore, because both of those things could increase inflation, right? So how are they going to prevent us from going into a recession? Well, potentially human QE, the idea of injecting more Canadians into Canada to produce productivity and to sort of fight inflation.
The strength of the economy that we've seen so far is that population growth has been exploding, right? So this year, population growth, last year, say fourth quarter, we saw the strongest population growth on a year-over-year basis since we've seen like 50 years. And before that, before the pandemic, we were experiencing the strongest population growth we'd seen in a number of years as well. And I think we're still struggling with understanding what that means from a macro perspective. Clearly, these are people that are coming in filling jobs. They're buying homes, they're buying all kinds of stuff. It's a very powerful source of growth and support for the economy. And of course, it's going to be long lasting. There's all kinds of policy questions as to whether we're doing it the right way and are we integrating them well or not, and whether it's being done well. And I have lots of views on that. But fundamentally, from a dynamic perspective, again, when you think about the recession, when you think about the year to come, if we continue to experience population growth at the rate that we have seen, like that's a very, very powerful support that, it's not monetary policy, it's not fiscal policy, it's just people living and buying things.
But at the very same time, with concerns about our healthcare system and how it's sort of struggling and feels like it's on life support itself these days, on top of the concerns about housing, will people be able to afford houses? We wonder if these policy targets of bringing in 500,000 new Canadians, are they still reasonable? Here's what Financial Post editor-in-chief Kevin Carmichael had to say about it.
So are they sustainable? They could be if we want them to be, if we choose to create the capacity to bring those people into the country. But that's the crux, right? That's the issue. Everything I've read on this, and if you look around, everything you see is that there are political limits to how much immigration societies are willing to take. We've been shielded from that political backlash in Canada to a great extent. I think we've reached a tipping point where our systems, whether it's the health system, housing, isn't up to receiving all those people. So you're going to start to make people angry, right? They're going to have a harder time getting their kids into a house, or they're going to have longer waits at the hospital and see all these unfamiliar faces in front of them in line. Those sorts of things are going to start to come into play.
So he says that this might not be the silver bullet that everybody thinks it is, because there is a political limit on the amount of new Canadians welcomed into the country that other Canadians are willing to accept. And if those individual Canadians no longer have the same positive views of immigration policy, well, then the government that represents them will be forced to change their immigration policy as a result in order to get enough votes to remain in power. But he does say there is a way that we could retain these these target levels, and actually reap the benefits of the human QE that we're calling it here on the channel, and not suffer any of the negative consequences to our healthcare and housing situation.
But of course, we could do something about all of this. We could stop messing around on housing and actually build some. And this gets back to my idea about like actually starting to look back at history and what we've done when we've had these problems before. So I think, JF, your benchmark was the biggest population surge since 50 years. Well, what were we doing 50 years ago? We had soldiers coming back from the war. We created CMHC. We built lots of houses for them to live in. We can do that now, but we aren't. We won't. So I think one thing we've learned about the current societies in which we live is it takes crises to actually get the political system, the political class, in a headspace where it's actually going to feel compelled to act. So maybe this pressure that we're starting to see is going to force people to actually make some tough decisions, which they haven't made for a decade and a half.
So if we actually took the steps now to make sure our infrastructure is set up to be able to welcome this many people, well, then this could actually be positive and could contribute to Canada's growth over the long term. But whether or not we trust the current politicians to actually make those decisions, to build more housing, to fund healthcare in effective ways that results in better outcomes, well, then we can't really count on the positive impacts of population growth. So now looking forward towards tomorrow's inflation report, which will have a big impact on everything, well, expert expectations are that CPI number is going to come in at 6.4% inflation year over year compared to last month's number, which was 6.8%. And now a decrease like this could certainly impact the Bank of Canada's next interest rate decision later this month. If it comes in too high, well, there's a great chance that the Bank of Canada will go forward with a quarter percentage point increased interest rates, which would flow through into mortgages and all other kinds of areas of the economy. But if it comes in lower than expectations, then that could be a sign that the Bank of Canada might hold off at this next interest rate decision, saying, okay, we're going to just leave interest rates how they are and wait for the decisions that we've made and the interest rate increases we've made in the past to actually filter their way into the economy, to make sure that we don't go too far here on raising rates, that we just have gone just far enough to bring down inflation without causing a large recession. But I'm curious, what do you think about all of this when we're looking at that Business Outlook survey? Do you agree with them that your inflation expectations are that we won't get it back down to a sustainable level until like 2026 or beyond? Or do you think that, okay, maybe the Bank of Canada will get things under control here? What do you think about the housing discussion, the population discussion? Let me know down in the comment section below. I read every single one and try to get back to a bunch of them. If you haven't already done so, subscribe to the channel. Check out the links in the description. And with all that said, thanks so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.